Hey, it's Joel Malkin. Welcome to Your Property Radio. I'm here with Ray Noble and Anthony Krupe, the founders of whatisashortsale.org. If you've never been to this website, you've got to go and check it out. You can find out what your property is worth. You can get all the information you need to know on a short sale. Find out if a short sale is for you. And if it's your first time ever hearing us talk and you're going, what is a short sale? Perfect question. We're going to throw it out to Ray.
Joel, a short sale is when you sell your property for less than what is owed on the outstanding balance of the mortgage. It's a great alternative for a foreclosure for both the lender and for the homeowner, and it's been very commonplace in the real estate market over the last couple of years.
So if you are in over your head with your home, which probably I would say, what would you say, about 3/4 of the folks listening right now are, or maybe even more, this is probably a really good option for you, and the banks are more than willing to do it these days. Anthony, why don't you address why that is, that the banks are more willing to do short sales today than they were even 2-3 years ago? Anthony Krupe, co-founder of whatisashortsale.org.
Basically, what has happened over the last few years is the banks have realized that by incentivizing homeowners to do a short sale versus foreclose on them, they've realized that they end up with more money at the end of the day. So they've been very aggressive. Even the government has come out and created a program which we call the HAFA program, HAFA program. They use these programs to incentivize homeowners who owe more than their property is worth to essentially short sale their property rather than let it go into foreclosure. So if they're in some stage of default, they're utilizing cash incentives programs basically to get these people to list and sell their homes.
All right, I want you to grab a pen and take this number down because, yes, whatisashortsale.org is a great website. You can find all kinds of information there, including the how-to guide that takes you through every step of a short sale. But I also want you to be able to call and ask questions of Anthony or Ray. And the number is 888-262-6933. Again, 888-262-6933. And you can, again, get the free guide at whatisashortsale.org. It talks about the process and the steps to take if you owe more than your property is worth. But really, guys, every situation is different, and you are always willing, no obligation, to answer any questions they may have.
Yeah, Joel, and every situation really is different, and a day or two does not go by where we speak to somebody and they thought that they might not be entitled to a short sale or didn't even really understand what the process was. And when we speak to them and we're able to dissect their particular situation, what programs might be available to them, in a lot of cases, people are very relieved that they, picked up the telephone or did some research, and found out that there are programs that they're entitled to. And a lot of these programs, like we've spoken about in the past, they're set to expire. The HAFA program, the Mortgage Debt Relief Act program, these are great programs for homeowners that they really should try if they're in a situation where short sale is an option for them. They could participate because those will expire by the end of the year. And
we're going to talk more about HAFA and the Mortgage Debt Relief Act and some other programs out there as well in a little bit. I just wanted to throw in there that I know some folks that have tried other options other than a short sale. There are a few of them out there, and they still weren't successful. First of all, go through some of these other options and then tell me why maybe they might not be as successful as a short sale.
The biggest option that most homeowners have tried to do, and some have had success, or some have even tried, and unfortunately the bank wasn't willing to do so, is a loan modification, which we've all heard that term over the last couple of years.
Sounds like a great idea.
It is. In theory, it is, Joel, because what a loan modification is supposed to do for the homeowner is lower their monthly payments. So you might have a person that might have at one point been paying, hypothetically, $2,000 a month for their mortgage, and now they're asking the bank, based on their current financial situation, can you lower my payments to, let's just say, $1,500 a month?
But is that $500 disappearing?
It doesn't. In most cases, what happens is the bank will take that difference and they'll put it on the back end of the loan. And then a lot of times they'll even recast the loan from, say, a 30-year mortgage that you originally had to maybe a 40-year mortgage. So it really is, in most cases, a short-term solution. Some people have been successful to do a principal reduction loan modification, but very, very rarely is that done where the bank will actually lower the outstanding debt that you owe on the mortgage, actually to what's considered to be fair market value of the property now, so that you at one point, you actually have equity as you're paying off your mortgage. Whereas with a regular mortgage modification, you're still not going to have the equity that you really so desire as a homeowner.
Yeah, the fact is that less than a third of mortgage modifications have a principal reduction piece attached to them.
Now, let's explain once again for a seventh grader, which apparently is the mentality that I have this morning, exactly what a principal reduction loan modification is. I know you kind of went over it, but let's break it down into a little more layman's.
A principal reduction loan modification would be if you owe your bank, your lender that you pay your mortgage to, let's say $200,000, and the bank, based on the fair market value of your property now,
which pretty much everybody's property has dropped in value over the last couple of years, correct?
So, in the past couple of years, their values improved, but since the high in 2007, property values are still below that high mark. So people are still struggling.
So if you bought a home in 2006, there's a great chance that it's not worth anywhere near what it was worth when you bought it.
Very few, very spotty homes, but for the most part, no.
So go back to that, Ray.
So, for argument's sake, if you owe your bank $200,000 on a mortgage that was taken out, like Anthony was saying, in 2006, 2007 at the peak of the market, and now in today's current market conditions, that property might only be worth, let's say, $125,000. Your bank, your current lender that you pay your mortgage to, will lower the outstanding balance of the mortgage from that $200,000 down to the $125,000 or whatever they feel is the current value of your property. But like Anthony said, that is one out of three people, if not even less, in most cases, even are able to obtain something like that.
And unfortunately, that only has started happening recently. For the first several years that loan modifications were taking place in the market, they really weren't doing principal reductions. They were only basically adding what was owed to the back end of the mortgage, and then recasting that loan payment, and then trying to extend the term over 40 years instead of 30 years, and that's how they were bringing the rate down.
And does that affect your interest?
In some cases, they did lower the interest rate, but when you're taking this huge sum of money and adding it to the back, you're still not solving the problem. You still owe all this money,
and you're going to be stuck in this thing even longer term than you originally agreed to.
And unfortunately, there's been, I don't know, I think the number is 26% or 27% of loan modifications have redefaulted that are in that situation. So even the people who have, unfortunately, who were successful in achieving a loan modification, because they had these large sums of money added to the back end or payments that may have not made sense for them financially, they, in some cases, have gone back into default, which is very disheartening when you think about it. They found the solution, and unfortunately, it actually didn't work out for them.
And now and we spoke about this too as well, based on the fact that the default rate is now increasing. Now the new loan modification, I believe as of September of this year, any new loan modifications that they're going to be doing, they're actually going to be raising the interest rate on those new loan modifications to compensate for the fact that they've had such a high default ratio.
So not only are you going to be paying that extra, say, $500 that you're saving now, and it goes to the end of the mortgage, you're stretching your mortgage terms potentially by 10 years or so, but you're also going to be paying on top of that more interest than you originally agreed to.
Well, anything originated as of September.
This is a mortgage that originates in September.
A loan modification.
A loan mod. So
they're going to be raising the interest rate. So they're making it even really what I'm trying to say, Joel, is they're making it even more difficult now for the homeowners to even do a loan modification because they're raising the interest rates where the purpose of a loan modification is to lower the interest rate. So you're obviously saving some money. And then also by raising the interest rate, it becomes more difficult for the homeowner to qualify for a loan modification. In order to qualify for a loan modification, you have to show the bank that you have the ability to pay. And that's all based on your debt to income ratio and what your monthly mortgage payments are, coupled with all your other expenses. So the higher the interest rate, the more money now has to be allocated towards your monthly payments. And again, that's going to disqualify a lot of people.
Right. And you have to also take into consideration that the length of time that you haven't been paying for. If you haven't been paying for X amount of years, well, the bank has paid property taxes. The bank may have been paying, there may be HOA association dues that are owed on this property. So a lot of people, unfortunately, may have fallen a little too far behind to then make this still make sense. But look, if the bank is going to give you a principal reduction modification, I know people who have received these things, and they're in much better situations. So, one of the things when we're ever talking with a homeowner is we always encourage them, look, exhaust all your options. Obviously we do more short sales than anything, but we tell them before you decide to move forward, list your property and going through this whole process of a short sale, really try to exhaust your options. Really try to make sure that you can't get a principal reduction modification if trying to save your home is something that you're really wanting to do.
Right, because there are people that just, it's a tough decision. We talk about this all the time. It's got to be a tough decision, emotional decision to
people are very attached.
To walk away from a home that you've put a lot of money, a lot of energy, and shared a lot of love in.
Right, but what we have experienced, Joel, is the people that find themselves in a situation where they feel that their personal situation is not going to change anytime soon, meaning like their income is going to change, and the monthly payments are really causing a financial burden for them where it's hurting the quality of their life, and they just want to do the right thing. They don't want to walk away from the property. They don't want to foreclose on the property, put in a foreclosure situation. So they feel that a short sale is a good solution. And the people that are proactive from the beginning, Joel, that either are going to miss their first payment or just maybe missed their first payment or two payments, that take the initiative to do a short sale after they've determined that this is probably the best solution for them, really make the process that much easier for themselves as well. And it's going to be less detrimental for your credit and and various factors. So that is always something to consider too, is if you are struggling, do your homework now so that if you do miss a payment or you're about to miss a payment, you're ready to pull the trigger and make and commit.
And the reality of it is that it's not, short sale isn't the end. So you got to look at it as really a new beginning, because within a couple of years you could actually buy a new home. Many people who we have worked with in 2009 have already come back, 2010 have already come back to us and actually are ready to now repurchase and enter the market again. They've been able to find stability within their workplace. They now qualify for mortgages. Lenders will lend to them. I think it's after 2 years they could actually qualify for a new mortgage. So many people who have gone through this, they're actually, being a homeowner is important to a lot of people. I mean, I'm happy that I'm a homeowner, and a lot of people, it means a lot to them. So, they want to be homeowners, and to be able to get out of a bad situation and into a good situation after a couple of years, it's not a lot of time to do that. So.
Yeah, foreclosure is a very bad thing for your credit. It's a bad thing for your history, and we'll talk a little more on that in a bit. I wanted to ask you about one other option. You're talking about exhausting your options. What is a deed in lieu?
A deed in lieu is when you basically turn over the title back to your bank, because the bank is what we call a lien position, first lien position on the property, but you're the owner of record. So you are basically turning over the title of your property back to the bank. The problem with a deed in lieu is, Joel, in most cases, the bank would actually rather you do a short sale first before they'll even do a deed in lieu. So most people, the short sale is the recommended solution for them, even directly from the bank, before they'll actually entertain a deed in lieu.
And the banks are, like I said earlier, are incentivizing these homeowners or any homeowner with cash incentives. Bank of America, I know, is putting out cash incentives. Wells Fargo has. Chase has. In some cases, I've seen people walk away with $35,000 at closing for agreeing to short sale their property. And the reason they're doing this is because they realize that if these properties aren't maintained, they turn into depreciating assets rather than appreciating assets. Properties need to be maintained. And, this is Florida. We all know. You turn your air conditioning off for a couple of months and all of a sudden there's mold. Mold could destroy a property very quickly once it starts. So banks realize this, especially in our area, and they're being very proactive with homeowners to try to give them the best situation to exit the home and waive deficiencies and allow them to move on. And
extremely motivated to work with the homeowners. This was not the case in 2008, 2009 when the market first collapsed. And even prior to that, when the economy was good, doing a short sale wasn't, few and far between. The bank would rather just foreclose on you. So the banks really have came full circle, like Anthony was saying. And at the end of the day, more probably what's good for them than what's good for the homeowner. But take advantage of that, because this could change at any time. And a lot of people, I think, do take for granted the fact that, oh, well, maybe if I don't short sale now, I will short sale in a year from now or in 2 years from now.
They may not be as willing, the banks.
Very much so. And we could already tell you from our experience, being that most major lenders, the 5 major lenders, they were sued billions of dollars, Joel. There were 2 lawsuits. There was an independent lawsuit and a national settlement. And that put a freeze on a lot of the foreclosures, even to the point there was a moratorium at one point. Those settlements have been done at this point, and the banks have been more aggressively foreclosing on people that have been living in properties for a couple of years and have not been paying. Not the person that has only missed a payment or two, but the person that maybe has been living there for quite some time. And the bank and the courts at this point are now pressing against those people. So that is changing.
All right, you're listening to Your Property Radio. I'm Joel Malkin here with the founders of whatisashortsale.org. You just heard Ray Noble, Anthony Krupe here as well. And they've got a number you can call anytime and get your questions answered if you're facing some issues with your mortgage. 888-262-6933, 888-262-6933. Or even if you just want to ask, everybody's situation is different. You want to ask, hey, tell me more about the short sales and how they work. And for that matter, you can go to whatisashortsale.org and you can download the free guide. Yep, I said free. Talks about the process and the steps to take if you owe more than your property is worth, or as these guys say, the folks in the business say, if you are underwater in your home. We talked briefly about HOFA and a couple of the other programs that are expiring. So go ahead, Ray, and address that, because you got to get on these. You can't just sit on your hands.
Definitely not. The HOFA program, which is a government-backed program that will give the homeowner, if they qualify, $3,000 relocation assistance funds, and the Mortgage Debt Relief Act will protect the homeowner, if it's their primary residence, against capital gains tax. Both of these programs were first set to expire in 2012, Joel, but they were extended 1 year, so they are expected to expire again at the end of 2013. And the HOFA program, not only do you get the $3,000, but you're guaranteed a deficiency waiver. You won't have to sign any promissory notes to the bank. So that really will put you in a good situation to start all over and, hopefully again buy within inside of 2 years. And the Mortgage Debt Relief Act, that speaks for itself. You're selling your property, you're short selling it. The last thing you want to do now is get hit with a tax bill and owe the IRS money after you just, lost God only knows how much money on your property. So that's another great a great law to take advantage of.
Plus, banks have their own programs. Each bank usually has a specific program. Like, for instance, Bank of America has their own program. Chase has their own program. And in many cases, they have sent letters out to homeowners, with these cash incentives or some sort of offering them some sort of program to short sale the property. Feedback from our customers and people that we work with, they've tend to throw these letters out, and
right.
You don't want to do that. They're not all collection letters. If you're in the situation and you may have not been paying on the mortgage or whatever the situation may be at this point, if you're getting mail from the bank, open it up and read it. In many cases, they realize, they're not all collection letters. There could be a cash incentive in there that encourages you to possibly list and sell the house, and you want to take advantage of that. Those programs will expire. They don't last forever, and if you don't act quickly, you could end up not getting it.
And in the same respect, if you haven't heard from your bank lately, because people have said that, well, I was served papers a couple of years ago and I haven't heard anything, maybe I'm good. You are not good.
Yeah.
They will get to you.
They don't forget. It's not like they forgot. They didn't get amnesia.
They definitely didn't forget. And that's usually the worst case, because, again, when they do pop up again, that's when a lot of times you ran out of time, and now you probably have to retain an attorney, spend additional monies, and now you're really fighting on the 11th hour. So, again, if you're in a situation where you could relocate, whether it be rent, and you feel that your current situation as far as your house goes isn't really going to change, you really are better off getting a plan, especially if you fell behind a couple of years on your mortgage payments, because like Anthony said, that all gets tacked on, taxes that haven't been paid, insurance that might not have been paid that the bank will force play. This is all monies that you're going to owe. So unless you're prepared to write a big check to the bank, you're probably going to be facing a foreclosure.
Well, that's why we always talk about if you're gonna exhaust your options, make sure if you're trying to do a loan modification, make sure that you're getting a principal reduction modification, if you're not getting a principal reduction modification and they're just tacking on $100,000 or $200,000 to the back of this loan, it's going to take years and years and years before that property is going to be worth that money. So, it just doesn't make any sense.
Right, and then you have the responsibility where you're the homeowner, so you have the responsibility of everything that comes with owning a home, paying the insurance, the maintenance, if the air conditioner goes, but yet you don't have the equity, which is what a homeowner should have when they're paying their mortgage. So I think a principal reduction as far as loan modifications go, really should probably be the only solution unless you think short-term something is going to change for you, but to get a payment reduction.
Maybe the boss is dangling the carrot.
Something.
You might have that promotion coming for you.
Something. It has to be something. But
it's got to make sense.
It's got to make sense.
That's really what, people, just to try to save, to be attached to a home and not have it make financial sense to you really doesn't make any sense. If you can, especially when you can own a home again, usually in a couple of years, and you really don't need a lot down. I mean, they have mortgage programs with 3%, a few percent down, and you could buy a new home again as long as you have good qualifying income. So it doesn't take much to get back in to owning a home again at some point. And usually you're probably going to be in a better situation because under new mortgage guidelines, you have people need to qualify properly for income. It's not like what was going on in 2006, 2005, where you just tell the bank what you make and they give you a mortgage. It's much more stringent now. But the other side to that is that they're writing mortgages now that people actually can afford. You have to be able to afford them based on your income in order to get them. So it's to be able to short sale your property today and within a couple of years re-enter and be a homeowner again and have the dream of being a homeowner continue in your life. It's not a bad idea. It makes sense.
And you guys talk about having an attorney, and I know that you say that you're fine with that. Nobody's going to sit here and say don't hire an attorney, but just keep in mind that it can get costly, correct? And then you also want to have a plan if you hire an attorney. Don't just hire one. With a lot of cases in life, I think that you tend to hire an attorney to handle, the attorney will get it. But in this kind of a situation, you want to know which direction to steer the attorney in, or you're just paying attorney's fees for no reason.
Absolutely. And we work with some really good attorneys that have helped a lot of homeowners. Like I said, for the most part, the ones that have waited too long, and the attorney really has to do what they do best, which is to save them on the 11th hour. But if they're doing that for you and you're paying somebody, and in most cases the attorneys will work on some type of monthly payment, make sure that you have a plan while you're working with the attorney. The attorney, he's not going to be able to do miracles. He's only going to be able to extend your lifeline for so long before the bank forecloses on you. So during that time frame, and most attorneys will tell you if they don't see that there's an alternative solution, that a short sale is probably the best option for you while that attorney is giving you ample time to get your affairs in order.
Yeah, one of the things that is going to happen is at some point, once the attorney can, obviously there's a process to what goes on where you're getting additional time. But at some point, the judge is going to set some sort of a trial, and that's usually what happens if you can't find some sort of a settlement, right? And at that point, most attorneys are going to ask for more money to go to trial. They're not going to. They need to be paid. This is what they do. This is their living. So you can't just assume they're going to go to trial for you for nothing. If they have to go to trial, it's going to cost more money. If you don't have the wherewithal to pay them to do that, you need to look at options and utilize the time that you have to take advantage of either a loan modification or a principal reduction loan modification, or pursue the short sale. People wait way too long in the process and then end up losing at the end because they weren't proactive. The biggest thing that we see every day is people coming to us in the 11th and a half hour, can you help me? And they have a sale date in 3 weeks. And honestly, if you don't get to, if you're not a couple of months ahead of that sale, it's very difficult. People, 10 days, 3 weeks is very hard.
Your Property Radio here with me, Joel Malkin, and that was Anthony Krupe, Ray Noble here, the founders of whatisashortsale.org. You can go there, get the free guide, talks about the process of a short sale, all of the steps from A to Z that you could take if you owe more than your property is worth. Sounds to me like a short sale, a great way to go. 888-262-6933, 888-262-6933. Of course, there's no obligation. We have just a couple of minutes to talk about why this assistance, save for an attorney. Obviously, an attorney is going to charge, and he or she has every right to charge. But everything else, if any kind of information and any kind of assistance they get from you and other real estate professionals, is all free. Ray, why is that?
In a short sale, licensed professionals in the industry, whether they be realtors or title companies, are the ones that generally help the homeowner facilitate the short sale. When you do a short sale, Joel, at closing and only at closing, your lender will pay the real estate commission and any title-related fees. They'll even pay the transfer taxes that the seller is responsible to pay. So if you're working with licensed professionals within the real estate industry, nobody should ever charge you any upfront money, any money during the process, or any money after the process.
And I can just, I really don't mean to interrupt you, but I can just imagine that there are postcards going out right now. People are getting in their mailbox, we're the short sale specialists and just pay us this fee.
Yeah, well, because generally those companies are processing companies. They're not real estate companies. They're not title agencies. And again, realtors and title agencies, they will get paid by the bank, and they understand that this is the only way you're going to get paid, and that's the way the process works. These short sale processing companies are more of a third party that will work with a realtor, will work with a title company, and those are the ones that usually have the tendency to charge homeowners money.
Okay. So once again, the only one that should be charging you is an attorney for his or her services. But if you're getting help from you guys, whatisashortsale.org, or anybody else in the real estate business, they should be no upfront costs.
Typically, any title company, realtor, they're used to working under the conditions of getting paid at closing. So it's important that you understand that, and it's important that you know that you could take advantage of that. You can find people who have a lot of experience in doing these types of transactions, and they can help you and kind of walk you through the entire process, and you can take advantage of that, and there's no cost for you to do that.
All right, that's Anthony Krupe, Ray Noble here as well with whatisashortsale.org. I want you to check that out. Download the free guide, How to Do a Short Sale Every Step, and call them 888-262-6933, 888-262-6933. I'm Joel Malkin. This has been Your Property Radio. Thanks for joining us, guys.
Great to see you again, Joe. Look forward to seeing you next week.
Take care, Joe. Enjoy the rest of your morning.